Primarily, Bitcoin is owned by individuals, some family offices, some hedge funds, but it's really, in the context of what it could be, a nothing burger.
Yup, that's Shark Tank investor and entrepreneur Kevin O'Leary. So, why did Mr. Wonderful call Bitcoin a nothing burger? Isn't Kevin O'Leary a known crypto advocate? What gives? So let's reset. What is Bitcoin anyway?
So Bitcoin is the oldest surviving cryptocurrency. It's also the largest cryptocurrency measured by market capitalization, and it's meant to be a store of value and a medium of exchange, so a method of payment. And it dawned back in 2008.
Bitcoin is the cryptocurrency that has the least amount of regulatory scrutiny. The US government, for instance, has pretty clearly recognized it as a commodity. That being said, Bitcoin is the most decentralized cryptocurrency as we know it, which means that it's sort of the farthest out of control by any one central party.
Okay, now back to that nothing burger situation. Do you buy into the narrative that Bitcoin is a hedge against inflation, even given the lack of regulation?
It hasn't worked so far, and the reason it hasn't is it's not being indexed. So it's a chicken and egg problem. It might be better than gold. It could be, but gold is allowed to be owned by institutions, and indeed they do own it up to 5% allocations of bullion or ETFs that track the price of gold. So we don't know, and we won't know until we let the entire free market buy Bitcoin, and we've shut out 75% of it.
75% of the market is shut out of Bitcoin? Can you explain that?
I'm an indexer. One of my businesses is to provide index services to sovereign wealth funds and pension plans. The classic example is a Middle East country that has a lot of oil, so maybe they make 200 or 300 million a day. Recently, they have asked about Bitcoin, specifically Bitcoin, in allocating 50 basis points to 1%, but have never done it.
If the fund wants Bitcoin, then why is it a nothing burger?
Its market cap is nothing compared to what it could be. And so I'm a huge advocate for getting policy done that would allow me and others to index Bitcoin, to include it in these indices of investments. And that would be a huge upside in the price appreciation and the potential.
Who's responsible for regulating Bitcoin?
We have a couple of sort of fundamental divides in our federal regulatory system for financial markets. One of those divides is that the SEC, the Securities Exchange Commission, regulates securities, which are capital formation instruments. The CFTC regulates derivatives, which are risk transfer, risk allocation instruments, the risks of commodity prices going up and down, for example. That's one of the fundamental divides.
I've said to the industry, to the lending platforms, to the trading platforms, come in, talk to us. We do have robust authorities from Congress also to use our exemptive authorities that we can tailor investor protection.
In the SEC's jurisdiction, they have traditionally had oversight over both derivative markets on securities, but also what we call spot markets. That's the physical delivery market of a security. You want to buy a share of Microsoft, you buy it, it arrives in a day or so, or at least it goes to your holding agency. That is a spot transaction.
The public benefits by knowing full and fair disclosure and that somebody's not lying to them. Basic protections. And whether you're buying a crypto token or you're buying a security such as equities or a security such as an asset-backed security, those basic disclosures, because we in America let investors take risk.
Now, for historical reasons, the CFTC has overseen only futures markets, that's forward or future delivery of commodities, but not the spot market. And the reason, it may sound strange, but if you think about it, it makes sense. The CFTC oversees gold futures, but not the trading every day of gold. Otherwise, it would have to oversee jewelry shops across the country. It oversees oil futures, but it doesn't oversee gas stations across the country. Those retail markets have traditionally been overseen by state agencies, state laws, and state commerce. That's a traditional divide. Now, what's unique here is along comes crypto, and it trades both in derivatives and it trades in spot markets. And if it's a security-based crypto, then the SEC has jurisdiction over both the spot and the derivative market. But if it's a commodity-based crypto, which is both the two biggest ones, Bitcoin and Ethereum, almost 60% of the crypto market falls under CFTC jurisdiction. The CFTC only has authority in the derivative markets, the futures markets, but not in the spot markets. And so there's a gap, there's a regulatory gap. 60% of the crypto market, when it trades in spot, is not overseen by a federal regulator.
But we do have robust laws and rules at the Securities and Exchange Commission. My fellow market regulator, the Commodity Futures Trading Commission, does as well. We fortunately have the ability to write rules and use exemptive authority, but the public is not protected largely because of the non-compliance in this space.
It sounds like there's some regulatory gray areas between the SEC and the CFTC. What else is going on in Washington about this?
The U.S. Treasury is out with 3 brand new reports warning that cryptocurrencies pose, quote, meaningful risks to consumers, investors, and businesses if not properly regulated. While the report offers general recommendations for reining in risks, it doesn't offer ideas for specific regulation or legislation. While one of the reports finds that consumers were regularly misled about crypto's features and expected returns, and that non-compliance with regulations is widespread. The reports encourage the SEC and CFTC to, quote, aggressively pursue investigations and enforcement actions against crypto companies that aren't in compliance with laws.
Sounds like the government has a lot of work to do to get a handle on this. Perhaps that's what Mr. O'Leary is talking about.
Do you think the only thing that's holding Bitcoin back from being more than a nothing burger is regulation, or are there other variables, do you believe?
No, it's just regulation. Bitcoin itself is a proven asset. There's no question there's demand for it, but you can't get that demand. You can't unleash the spigot of demand without policy, without regulation. 75% of the capital invested around the world is not owned by individuals. It's owned by pension and sovereign wealth. 75% of the market does not participate. That is the problem with Bitcoin. That is the issue. For everybody saying, oh, we don't need to regulate crypto. Yes, we do, because we want the 75%, the trillions of dollars that can't buy it now, to come in and allocate to it. 1, 2, 3, 4, 5% allocations to these big projects. And I think that's the potential. That's why investors like me are spending so much time in Washington these days, because it's in my economic benefit.
You believe that it's really just taking the regulation to get us to a point where we get more of a mass adoption or more people using cryptocurrencies?
It's simple math. When 75% of the capital of the world is tied up in sovereign and pension wealth, and they're not allowed to buy crypto, that's bad. If we unleash that, that's good. The only way to unleash it is to give them compliance through regulation. They can't invest because they have compliance departments overseeing asset allocation. Compliance says no, because they don't have any regulation. There's no optionality.
Do you think there's any specific variable that's slowing down oncoming regulation in Washington?
Well, volatility is obviously what happened with stablecoin with Luna was a disaster. All the people that don't know what they're doing are getting wiped out. That's a good thing. Now, it's tough for the investors, but it's okay, because when you take a big spatula like bankruptcy and scrape out the patina of all the idiot managers, you get them out of the industry. That's good. What you're left with is much stronger management, much better business models, much better projects that are well financed, and we can move forward going through that. So when people say to me, what about this correction? It's a good thing. It's a great thing that happened here. And I'm sure there'll be more corrections, but those are people that didn't know what they were doing and they put on too much leverage and they got wiped out. That happens in every market, in commodities and stocks and bonds. It's happened for decades before. Idiot managers always get wiped out, and that's okay.